Good morning, everyone, and welcome to the Quantum Leap morning homework session for Wednesday, February the 26th, 2014. For those that are visiting us from Twitter or watching this on YouTube after the fact, Quantum Leap is a self-organized learning environment. We come together within a private Skype room that's been around for 4 years, and we come to talk about the market, talk about trading, and then each morning we come into this go-to and look at the markets, do our analysis, and then set our levels up each morning and our targets off of those trade levels. My name is Doug McKay. I am the founder and the head moderator. If you're interested in checking us out, you can send me a Skype request at Doug_McKay. Starting next week, we're actually going to be changing. I'm finally making the quantum leap. I'm leaping over to Stealth Analytics and heading up their trading division. So the Quantum Leap name is actually going to go to the wayside, and we'll be doing everything under Stealth Trader. And if you're interested in finding out more about Stealth Trader, you can send an email to me at d.mckay@stealthtrader.com. We're going to get going, but before we do, I've got to get the legals out of the way, so let's do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. Only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk or loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see are for education purposes only. Please do your own due diligence and trade your own trade plan. All right, first thing we like to do is we like to look at the macro to micro numbers just to see where we are, put ourselves into context. Of course, the big news is that we've gone up and made new year highs. We have a new year high and a new all-time high up at 1856.75. So we talked about this for weeks at that 46.50 and that 45.75 was a weak high, and that we were likely to come up. And I was convinced that the top was not in, even though we had that sell-off. That as long as we held above that 1818 level, that we would come up and take out that new high, and we did. So our year open is below us right now. We are in a bull year now. Are open at 1837.75 for the year. We are now trading above that, so the bulls are back in charge right now. Nothing else really jumps out in terms of the macro numbers. The big number to watch right now is that 1840.50, and I'll show you why in just a few minutes. Taking a look at yesterday's intraday numbers, we opened up the Globex at 1844.75, had a high 46.75 and a low of 41, and then we opened at 1845.25 the RTH session. Had an open auction in range, broke the IB to one side for a normal variation, 6 1/4 point opening swing, gives you a rotational day. We definitely had a rotational day yesterday. The initial balance high 47.75, initial balance low 37 1/4 for a 10 1/2 point initial balance. And you can see that normal range for initial balance being the first hour high and low, is usually between 6 and 9 points. And you can see that we've expanded our initial balance as they've been battling back and forth. So we've got lots of rotations within the RTH session. Kind of a mixed bag for the intraday numbers for the RTH. We had 1230 number, and the RTH high is lower, and the VPOC was lower, but we closed higher, and we had a higher low. Range is still been expanding out. Our 20-day RTH is just under 18 points. Full session just under 22 1/2, and Globex just over 13. Broke the IB to the high side, and again, we've been breaking the IB later than usual. Usually, the averages will put the initial balance in, and then we'll break it within that 15 minutes. We call that inside the pocket. But lately, we've been breaking it outside of the pocket and in the secondary pocket, and sometimes even further. You can see that we've had some really late breaks, and that's usually a sign that the market is you know, yeah, at a decision point, and you know, they're battling back and forth, and that's why they're breaking later, because neither side wants to capitulate. But once they do capitulate, you get those vertical moves like we did, and that new all-time high. Taking a look at the overnight ATR target so far for the full session. We've got a full session ATR target to the upside, 1868.75, and a full session ATR target to the low side at 1830.75. No real news today. We've got new home sales coming up at 9 o'clock Central, and then we've got crude inventories at 9:30. So, you know, just that first half hour, make sure that you pay attention and don't don't get into a trade just before this this new homes, because it could move the market. I'm going to bring up the COT report again, because I think it's very important to understand the dynamics of the different participants within the marketplace right now. And you can see that commitment of traders reports, the zero line right here, the large spec and the commercials are net short, and the retailers are net long. And looks like the commercials and the large specs are, you know, preparing themselves, and they're probably selling into this this rally that we're getting, and they're going to leave these retailers as bag holders. This is the blow off top that I've been talking about and anticipating. So you know, just be careful. You know, you don't want to buy the highs. You want to sell the rallies right now and start positioning yourself. Doesn't mean that we can't go higher, because the pressure is, you know, the risk is certainly to the upside right now. But when they drop the dime, you know, there's going to be a lot of hurt involved. So let's take a look at the trend overall, macro to micro. You can see on the monthly, you know, we've got a very strong trend going. We've got, you know, good slope and separation on the 9 EMA and the 20 SMA. You know, we've come down, closed this little technical gap right here, and then bounced off it. And of course, we've gone up and made new highs, with the all-time high now being 1856.75. So the trend is very much intact on the monthly. On the weekly, same thing. You know, we came down, we had that weakness. They took it, you know, all the way down to that 1732. And which happens to be that key number we are watching down there for buyers to step in if you've been in the sessions. And then they did not close below the 20 SMA. They bounced up, closed back above the 9 and the 20, and now we've got slope and separation, and we're trading above all the prior weeks right now. We've got 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, we're trading above, you know, the last 10 weeks these highs. So very strong trend on the monthly and the weekly. Let's just drill it down one more to the daily, and you can see again the daily confirms that the trend is very much intact right now, and we've got good slope and separation, and you know, the you know, price. We've got a bit of a technical gap right here. A tech gap close is likely going to be, you know, in the 36 to 32 range. We'll look at that on the composite chart in just a couple of minutes. Going over to the geometric chart, I was mentioning to Howard, it's really starting to get convoluted in terms of, you know, trying to find a definitive you know, pattern in here. This downward sloping fork right now, I think, is really, after today, I'm going to take it off the chart because I don't think it's relevant anymore. But I've added this new downward sloping fork off of the high at 1856.75 as the B point. And you can see we've got fairly good frequency along the axis, and you know, we've rejected off the top. So it's pretty new, as you know, to look at it. But right now, what I'm watching is we do have an energy point down here. If we get a major sell-off, you know, today, and we've got an energy point down here at 1816, and that's just above that 1818. And that's a big move from where we are, so I'm not anticipating it. I'd be looking more to come down and this intermediate fork, okay, coming down and testing the you know, the upper line of this intermediate fork down here at the 1839.83, really 1840. And that's one of the reasons why, you know, that key CLVN that we've got on the composite at 1840, I think it's 1840.75 right now, or 1840.50, you know, corresponds with a retest of the upper line of the intermediate fork. We do still have this energy point coming up in the future, and it's in around that 1836 to 1832 level. So again, right at that key area of the composite. So let's take a look at the intraday and see what kind of trends we've got coming into the RTH session. On the 4-hour, you've got, basically you've got an inside bar here, Mr. Sneaky, just after the high. We're getting some consolidation, but we're holding above the 9 EMA. But we've kind of lost slope. We still have a bit of separation. They're coming down and testing this. So really no clear direction on the 4-hour. Going down to the 30-minute. 30-minute tells a little bit different story. We came up, made that high, and then we've rolled over, and we've got the 9 EMA crossing over the 20 SMA, and we're trading below both the 9 and the 20, and we're starting to get some downward slope and separation. So it looks like they're the trend has weakened on the 30-minute. We'll just drill down one more to the 5-minute, and you can see that the 5-minute, we were trending down, and we're getting some consolidation down here, but we do have some weakness coming in. So just be careful on the open. Let's take a look at the macro on the composite. So just to try to bring this into context, we were holding we were watching this micro composite between December 23rd and January 23rd with the most traded price, or the micro composite VPOC, at that 1832.25 level. We fell out of balance, and we came all the way down, into this prior area down here where we started this big rally up. And basically in around that 1832 or 1732 and a quarter, 1732.25. Buyers stepped in. We were expecting that. If you were in homework back here, we were saying look for the buyers to step in and hold us. That was the with the key level, with the other side of the balance being down there at that 1719, 1720 level. Buyers stepped in, took us back up, came back up into the balance zone that we were in at 1781.50, and we're trying to hold on the way down. They came up here, accepted that value again, broke out just before they broke out of value. They had price acceptance at 1792 level, came up, consolidated and accepted value at 1814, and then we got back up into this prior balance area. And this is where we were talking about, as long as they held this 1850 level, that the top was not likely going to hold, and they'd go and blast off. And they first accepted value again back in the 1838 area, and you can see when they made that 45.75 and were unable to take out the all-time high at 46.50, they tried to hold value at that 1838.75. Same thing on the way up. When they're looking for buyers on the way down, we watch where they accepted value before, and when they're looking for sellers on the way up, we're looking at where they were trying to hold value before. And you can see they came up, held value in the last area that they were able to hold value before they fell out of balance and had to come down to find buyers with more conviction. So right now they've accepted this 1838. They moved it higher in the last couple days and blew off the top, and now they're trying to hold value in around this 1844.50. So the key levels that you want to be watching today is obviously this 46.50 is going to be a key level to hold if we're going to go up and make new highs. Now we do have these wicks right here, and one of the things that I always talk about is wicks and tails, are improper auction areas, and a lot of times when you get these type of blow off tops, you can get just consolidation where they come back up here and repair the auction up here, and we get stuck in the wicks. So there, one of my main hypotheses for the day is if we can hold 46.50 CLVN and the prior all-time high, that we're just going to chop around in this area up here and get stuck in the wicks. Current value area high for the last 2 days is 49.50, and the low is 40.50, and I was talking about that 40.50 because it's been a very important level for us. It is the top of that that one intermediate fork that we're looking at. It's the value area high from the micro composite that we were in on the last two highs that we put in. So if we get below that 40, 50, 40 and a quarter area, then we're coming back into value again, and we're likely to get a move down towards, the first target being 38, but the the bigger target below is going to be that 36.50. This, we have these two distribution zones right here between 36.50 and 32 and a quarter. So I'd be looking, if we do break below that 46, for rotation first towards this 42 point, and then a test of that 40.50. And if we break below, I'm anticipating a bigger move down in between the 32 and a quarter to 36.50 area. So watch this 46 area, and then if we break below that, look to target. You can get in and get funded and scaled before the 44.50, but look for a bigger rotation down to that 42 area with a test of the other side of that balance at that 40 and a quarter, 40.50. And if we hold the 46, then we're just looking at a chop. I'm not anticipating a big move in the market to make new highs today. I'm really anticipating a rotational day and getting stuck in the wicks up here if we hold 46. But if we break below 46, then I'm looking for a rotation back towards that 42. And I think the VPOC for yesterday is 41.50. So that fits right in, coming down into this price acceptance level and testing that CHVN with the other side of balance and that key CLVN. In fact, I should put a CLVN line in here at the 40.50 area. So let's take a look at the overnight and start moving our numbers over. You can see that the overnight inventory was very balanced around this 49.50. So they're accepting the this value up here, currently trading 49.75. You've got a pretty decent bell curve going here, and you can see that the overnight low, LVN, the swing low is down here at this LVN in around that 47. 46 area, and with the low being at that 46 and a quarter. So that 46.50, 46 and a quarter level is going to be one to watch to be tested. So let's move our overnight high over at 53 and a quarter. So we went up and made another new high in the Globex. Above yesterday's range, RTH range high, and then our overnight low is at 46 and a quarter. Which also happens to be right there at yesterday's value area high and the naked close. Close for yesterday, 46 and a quarter. And then the VPOC, overnight VPOC, Globex VPOC, 49.50. So just get rid of this now. We don't need that anymore. Take a look at this to the composite. So we're going to open, if we open the RTH session, we're going to open in this upper distribution from yesterday, and you've got the value area high, the naked close, and the overnight low down here at this 46 to 40, just call it 46 to 47, as well as a key CLVN right now. So if we open up in this area, I'd be looking to come down. My main hypothesis will be to come down and test the 46 level, test the value area high and the overnight low, and take out the overnight low. Remember, we have a 96% probability of taking out the overnight high or the overnight low. As long as we're inside of range, the probability will shift towards this 46 level to take out the overnight low. And then, of course, if we break back below that 46, then I'd be looking for a rotation back towards the CHVN at 41.75, 42 area, and the VPOC from yesterday. We left value below us, okay? Value did not shift up yesterday in the RTH session. It did shift up overnight, but likely if we can't hold that 46, we're going to rotate back down to test this value and see if we can find some buyers. And I'd be looking for, a probable move to have, you've got the 80% value area rule of coming down and testing the lower side of that value, and that value area low and behold, look where it is at that 40.50 that we're talking about. So a lot of confluence down here, but the key number to hold today for just continuation of repairing the auction up here is that 46.50. If we get below that, get your shorts on and trade into that 44 level. Make sure you scale there first, and then look for that continuation down to the 42 and the naked VPOC on the other side of the value down here at 40.50. And then if we get below 40.50, then again, you've got to be looking for a rotation back down towards this 36.50 as the first destination, and you want to get in and get scaled before the 38. So in terms of trade levels, the big trade area, of course, is going to be this 46.50, and with your first target being the the first target below 46 will be this 44 and a quarter area, that 44.50, which is where they've held value for the last 2 days. So the first target below us at below 46 is going to be 44.50, with a push through to the other side of balance. And the secondary target will be that it's really going to be the 41.50, but I'm going to put it down at the 42 level because that's the CHVN. So 42 will be our secondary target, with the other side of balance, and where I'd anticipate responsive buyers to step in is at that 40.50. Below 40.50, I'm looking for the first target below at 38. With the test of the range low at 37.75. And I'd be looking for range buyers to step in there and hold us. And then, of course, the extended target below us is going to be down here at that 36.50. If we break that range low, you want to get in and get scaled, because they might just make a quick push through and pick up buyers down here at the 36.50. And then the real extended target below us is going to be the 32 and a quarter, with this naked close right here at 34 still out there. In terms of the upside, our ATR target above is that the extended target is going to, the first target above is obviously going to be the overnight high. So that's going to be your first target above the 51. So I would be using the 51 as a range breakout, and then the first target being that 53 and a quarter, with the secondary target up here at the all-time high now, the new year high at 56.75, and then our extended target is the ATR, 20-day ATR target up at 1868.75. But I really don't believe that we're going to go up and make, we might go up and test the 56.75, but I'm not anticipating another big move up. We need to, repair the auction in this area. We've had a big strong move. This is a very strong selling tail right here, so we're likely just to chop around in this area and get stuck in the wicks. So taking a look at the Keltner and Renko, you can see that the Keltner center line is 47.75. You can see we've broken below it right now. We're coming down and testing that 46.50 now, even before the RTH open. Move down to test the lower Keltner will take us down. Look, 41.75 to 42 area by the time we get there. See how these numbers play out on the different methodologies, and then a move to, if we break back above the center line and go and test the upper line is going to be a test of that 54 area, or the takeout of the overnight high. So that's what we're looking at in terms of the ES. Let's jump over quickly to gold. Again, gold is, we've been talking about this major bottoming pattern, this descending broadening wedge for weeks and weeks and weeks and weeks. I've been talking about this being a bottoming pattern and how powerful they are, and once we broke out that we should get a major move. And my first target above for the breakout of this descending broadening wedge was this swing high here at the 1354 level. And we've come up and we're creating this really beautiful rounded bottom, and what can be a cup and handle pattern. And we were watching it on this swing high. We said that the right rim of the cup can still come up and be more equal with this last swing high in the left rim of the cup. So right now I'm watching this. I've redrawn the Fibonacci's so that we can look at where the likelihood to validate this cup would be if this is the right rim. So right now, if we come down, we need to come down to the 1283 level, the 38.2% retracement to validate the handle of the cup with a possible move all the way down to 1245.50. Anywhere between here and here validates the handle if this is going to set up as a cup and handle pattern. Of course, with a cup and handle pattern, you get a measured move, and if we break the right rim after validating the pattern, a measured move would take us all the way up to 1500 to test the 1500. And again, we've been anticipating this because we've been watching this bottoming pattern, and when these type of long-term bottoming patterns usually extend to a major move, up and off the pattern. So we're just looking at the the patterns within the pattern, but I still believe that the bottom is in on gold. Even if we get a retracement, it's just validating the current pattern that's setting up on the cup and handle. Let's just take a quick look at what that looks like on the composite. You can see that we've come up here and we're holding value above 1334, the 2-day microcomposite VPOC. If we get below this level, I'd be looking to come down and test this 2875 level. We'll break, you've got the range low and a minor CLVN down here at 1331.20. So if we can't hold this value, I'm looking for a move down. And if we break the 28, the target below is the value area high at 1324 area. Remember that 1324 area? If you've been around, there it is again. Now we're above it. That's where we should, we were looking for the move up to it. Now we're looking for a move back down to see if we can pick up buyers here. And with the microcomposite VPOC down here at 1320. It's not naked, but it is the most accepted value within this consolidation and distribution zone. And you've got this 1319.70 area CLVN right there. Below that, was the target on the move up with the break above that that 1300 level. The first target to the upside was that 1315. We went up, consolidated around it, and then blasted off again. But right now I'm really anticipating a little bit of a move down in gold to come down and test these key levels below it. But if we get back above 37, then look for a move up to this 40 and a quarter, and the other side of balance up here at 1351.60. And I'm not anticipating any larger move in gold than that today. So that's what I'm looking at, Howard. What do you have for us?
I can run over a couple of things.
You have the comm, sir.
All right, so looking at market breadth, we are looking at our sectors to start off with. And looks like utilities have been leading most of the way. Healthcare has now overtaken them. They're both up just under 7% on the year. Retail is making a furious comeback from down below, and then we have our cluster of the other sectors with mixed performance over the last few days, clustering just slightly above or slightly below their year open. So now we'll look at advanced declines and up-down volume. And we'll look at on-balance volume as well. Okay, so since we made our high back on the 24th, the market's basically gone flat, and we actually made our high in advanced declines back on February 18th, and it's been waning a little bit since then. We made our high in up volume versus down volume on the 20th, and it's been waning since then. So these will be kind of a key milepost here to keep an eye on. See if we've set our highs here, and it's going to be our early indication of a possible market top. Since then, the number of advancers versus decliners have been waning, as has up volume versus down volume. Contrary to that, we have on-balance volume, which made a new high yesterday. So we have a little bit of divergence among the indicators. On-balance volume has shown even more strength than price has. So now we'll go take a look at our daily chart. And the one thing I wanted to show here was that if we continue moving higher, I've calculated a fib level here back up, or not back, but up to 1886 as a potential target. And that would be where wave 5 would equal wave 1 in terms of counts. So when we move to a weekly chart, we can take a look at the structure I've been looking at. So this would be from back on June 24th, where we have this swing low. So I'm looking at a wave 1, a 2, a 3. This last retracement created a wave 4. And the way I calculated my target was to take the wave 1 length and start from here, and that would give us that target back or up to 1886. So that's what my accounts look like, and that's all I've got this morning. We've got about 9 minutes to open, Doug. I'll turn it back over to you.
And confirm that
Thanks, Howard. So we went down and tested that 46 level. We've bounced off of it so far, so we are holding it. But that is the key level that we need to hold, call it the line in the sand today. Below that, look for that move down towards 44 and 42. If we hold above it, look for rotation back up towards this naked VPOC and the breakout of the range high from yesterday at 51 and a quarter level. Above that, look for the overnight high to be taken out and a push to test the all-time high and the year high, and then look for responsive sellers to step in there. If they break above that, then you've got your extended target up there at 1868.75. Everybody have a great day. Remember, trade well, trade safe, and we'll catch you on the flip side.